Hi, Matt McAleer, Cumberland Advisors. We're going to try something different this week. In terms of our weekly reviews of the markets, you often hear me discuss relative strength. And I've gotten a few questions asking me, what do I mean exactly by relative strength? Because, by the way, relative strength can mean different things to different traders and investors. At Cumberland, we lean on Dorsey Wright, a NASDAQ company, to provide us with some analytics and data that create a picture for us on whether a stock or a bond ETF or an equity ETF or a commodity ETF is exhibiting strength versus the market, versus its peer group. Is it on a positive trend or a negative trend? Is it moving upwards in strength or weakening? What we like to do is follow the numbers. 0 is the weakest, 5 is the strongest. Stocks and indices and ETFs will range throughout that 0 to 5. We want to try to put capital to work in securities that are ranked 3 and above and exhibiting an upward bias in that rating. We want to try to stay away from weak relative strength names that have a 0, a 1, or a 2 grading when we do the work. Let's take a look at some strong relative strength stocks and some weak relative strength stocks to try to see an example of what I've been just discussing. Let's look at strong attribute Dow Jones stocks as of 9/8/23. And by the way, a link of all 30 Dow Jones stocks is below. Let's take a look at Boeing, Microsoft, and Intel. I wanted to pick names that everybody was familiar with. Boeing, back on October 26th, became an acceptable bet. In other words, its technical attribute rating became a 3, 4, or 5. Since that period, the stock has gained 57.91%, while at the same time the S&P 500 equal weight has only earned just less than 8%. You had performance spread there of a positive 50%. I wanted to put the granddaddy of all relative strength names next. That was Microsoft. As clients know, that's been a holding of ours for some time. Look at how long Microsoft has been ranked a 3, 4, or 5 in the technical attribute ranking system for 3,340 days, all the way back to 2014. Look at the performance of the stock, and more importantly, look at the performance of the stock versus the S&P equal weighted index. That is a stock showing monster relative strength. Then I wanted to include Intel because Intel was the most recent Dow Jones stock to become an acceptable bet. That doesn't mean we're buying it. It means it's a stock within a pool that we're interested in reviewing. In terms of Intel, just back on the 7th of September, it became a 3. By the way, it is now a 4 after a couple of strong days. So we'll see. This will be a wonderful example of looking at a current move in a stock starting to exhibit strength versus the broad market and its peers. Let's take a look at, more importantly, where we can identify weak attribute Dow Jones stocks. If we can let our winners run and keep our capital out of weak names, odds are we're going to have solid performance over that period. Take a look at the 3 well-known stocks below. Let's start with Amgen. Back at the beginning of this year, its ranking from a technical standpoint fell below 3. So it would have been unacceptable from a technical ranking. During that period, stock's still up, and it's actually outperformed the Dow Jones. Not by a tremendous amount, but has exhibited outperformance. This goes to show that regardless of what system of research you use, there are always going to be outliers. There is no perfect way to make decisions on buying and selling stocks. A sum of the parts, looking at broad evidence, is helpful. Take a look at Disney, one of the better known stocks in the country. All the way back in September of 21, this stock fell below an acceptable ranking from a technical standpoint. During that period, Disney's down over 50%, while the S&P equal weighted index is down, call it a couple percent. That relative weakness of negative 50% can be a portfolio killer. Let's take a look at Verizon, which has been a real headache for a number of clients. Clients like Verizon's dividend yield. And while dividends are important, dividends by themselves are not an acceptable reason to own a stock. Verizon has been on a weak attribute or sell ranking since May of 2020. Look at the performance of the stock since then, down 27%, while the S&P equal weighted is up nearly 50%. That's monster underperformance. So those are names that we would have to see improve technically to be added to the portfolio. So I just wanted to take a few minutes to go over some of the background of what we're looking at day to day. And the key being, we want to own securities that are performing well versus not only benchmark, but their peers. And as they fade in attribute, in ranking, we're probably going to clip them a bit. We want to own good, solid, strong names that continue to outperform the benchmarks. Enjoy the weekend.
Good afternoon, Shaun Burgess here, portfolio manager and trader here at Cumberland Advisors, stepping in for the Moose this week. Got some great info out of Matt on his part. For fixed income, more of a sideways week. The 10-year was really unchanged, really saw little change, only up about 4 basis points in yield. The 30-year up about 6, so not a ton of movement. Municipal bonds, even less so. Good outperformance from municipals. We continue to look for value, especially in the longer end. You know, it seems like every week I talk about how attractive longer bonds are, especially longer municipal bonds. Same holds true for this week. We're really looking for value, really looking for 4.5% or better percent yields if we can find them. Depending on the maturity, you may come in from that, but you really want to be buying value in here, and that's what we're trying to hunt for our clients. Next week, you've got an FOMC decision. It's a 50-50 coin flip, whether they pause or hike. Probably likelier to see a pause, but it's going to be very important to see what their comments are after. You know, coming off of last week and this week, especially off of PPI, we saw a little bit of an uptick in inflation. We're keeping a careful eye on that because that's going to be the driver for the Fed moving forward. So next week, going to be a really important week with what the Fed comes out and says as it relates to inflation and what they're looking to do moving forward. Municipal bonds, continue to like the long end. We think it's really compelling value there, especially when you look at taxable equivalent yield of a 4.5 or better tax-free bond. Great value there. The short end, we tend to be more cautious on. Remember, the short end's driven by the Fed, the long end's driven by the market. So we want to be much more careful on the short end as we put money to work, but you can still find some good value there. So that's our game plan moving into next week. Going to keep a careful eye on what the Fed says off of their decision and how inflation behaves going forward. Very important for how we're positioning portfolios from here on out. Thanks everyone. Have a great day, and don't forget to like, comment, and subscribe. Be well.